My fellow investors, fellow Jamaicans, the NCB Financial Group has officially released its unaudited interim financial results for the first quarter of the 2026 financial year. And the numbers tell a story of massive scale and shifting internal dynamics. For the 3-month period ending December 31st, 2025, the regional financial powerhouse reported a consolidated net profit of $5.1 billion. Now, while this remains an impressive figure for a single quarter, it still represents a slight 1% decline compared to the $5.15 billion recorded during the same period in 2024. This marginal dip is being closely analyzed by investors, looking for signs of how the group is navigating the current interest rate environment across the Caribbean and beyond. When we look at the portion specifically attributable to stockholders of the parent company, the profit came in at $2.53 billion. This is a decrease from the $2.63 billion reported 12 months prior, resulting in earnings per share of 98 cents for the quarter. Now, something that a lot of persons missed was that one of the brightest spots in the report was the growth in core banking revenue. Net interest income rose by 4% to reach $20.72 billion. And this growth was actually bolstered by a significant reduction in interest expenses, which fell by 8% to $11.11 billion, showing that the group is managing its cost of funding effectively. However, the real showstopper of the quarter's report was not in the traditional banking sector, but in the insurance arm. Net income from insurance activities skyrocketed by a staggering 551%, jumping from $1.26 billion in the previous year to a massive $8.18 billion this quarter. This explosive growth in the insurance segment provided a vital cushion for the group, especially as net results from banking and investment activities saw a 25% decline. This shift highlights the importance of NCB's diversified business model, which spans over 20 countries. On the efficiency front, management appears to be making serious headway. Total operating expenses were reined in by 5%, falling to $26.23 billion. Now, this reduction aligns with the group's stated retooling strategy, which focuses heavily on cost optimization and digital transformation to improve the bottom line. The group's balance sheet continued to be one of the largest in the region, with total assets now scaling to $2.42 trillion. This growth was largely supported by a 14% increase in investment securities, which remains the group's largest earning asset portfolio. Now, the leadership, including Chairman Michael Leachin and the Group CEO Robert Almeida, has emphasized that the current focus is on 3 main pillars: efficiency, governance, and customer experience. They believe that these results were tangible evidence that their strategic changes are taking root and stabilizing the company for future growth. Now, despite the small year-over-year decline in the total net profit, the massive surge in insurance income and the tightening of operating expenses suggest a resilient organization. Investors are now looking towards the rest of 2026 to see if the group can sustain this insurance momentum while revitalizing its banking and investment gains. So let me know in the comments below, what did you think of NCB's profit for the first quarter? Please remember to like and subscribe so you can get more contents like this in the future. Thanks for watching, and click the link on screen now to watch another Jamaican financial content. Catch you in the next one.